There was a cryptocurrency crash, and it's kind of still going on, right? Let's talk about the cryptocurrency crash. Let's talk about cryptocurrencies in general, why you shouldn't really be worried about it. I'll also show you what the heck this is and how to read it. Candlestick charts and other kind of price charts are super crucial when you're looking into making investments, not only in Bitcoin and other cryptocurrencies, but just in other asset classes across the board. So let's get into all of that and more. It's Crystal with the Cash Compass. All right, welcome or welcome back. I am here to teach you all the things that you should have learned in school about money, but for whatever reason, they forgot to mention it. If you love all things personal finance, investing, economics, Bitcoin, cryptocurrencies, definitely subscribe. This is the spot for you. It's a very safe place. And it's free. Let's get into it. Okay, so I've talked about cryptocurrency on my channel a couple of times, honestly. So if you want to check those videos out, you can. I am going to be creating much more crypto content because it's what people are into, right? It's what the people want. So be sure to subscribe. But let's get into this crypto crash, right? What caused the cryptocurrency crash that has happened in this year, 2021? Two simple words. Elon Musk. Half joking. But so what you have to understand about cryptocurrencies is that they are volatile. They've been volatile. They will continue to be volatile until they become more stable, right? There's still kind of a cloud of uncertainty, and that is beyond obvious because people are turning to Google to see if they should buy or sell. And if you are one of those people, then you are in the right spot because Google is not where you should be looking to make those decisions. You should be making informed decisions. So you need to get the information so that you can make those decisions, whether you want to buy or sell. And you don't have to depend on Reddit, Google, or whoever, your uncle. But like I mentioned, it's not abnormal for cryptocurrencies to be volatile. Bitcoin was at like around or close to $20,000 at one point, and it dropped down to $3,000. Now it took 3 years for them to actually recover those gains. So if you were somebody who bought Bitcoin at that price, you was crying for 3 years, right? But now you're sitting quite pretty because, you know, it kind of shot back up, and now we're kind of seeing that same thing again where it's kind of diving back down, and it's taking Cardano, it's taking Link, Dash, it's taking all the coins down with it, okay? That is normal. A lot of these coins may not have a lot of volume, or they may have a lot of high people with a lot of money making these moves, right? So if there isn't a lot of volume and a lot of people actually trading these cryptocurrencies, it won't take much to make dramatic movements, right? If it's only you and I in, like, let's say I made a new coin up, okay? It's called the Chrissy coin. And there's only, 3 users in there, actually, let's say. Let's say, I come into some trouble and I need to actually sell all my assets so I can pay off whatever debt I have. If I sell all my assets, that would be a 33% drop in the price, right? Because it was only 2 people in there and I sold everything, just to kind of like illustrate that. To clarify, it doesn't necessarily have to be 33%. It depends on what the market is going for. But if I had a lot of shares I'm pouring out to the market, that could tend to drive the price down. If it is a situation like that, then either people who have a lot of the coin, right, or a small group of people could really make dramatic differences. If you believe in cryptocurrency and what it stands for, and you believe that it is the future of currency, then these volatile kind of up and downs right now would not affect you. So I think you have to really assess what you think cryptocurrency is. I think a lot of people that are entering the space now are really interested in gains. They want to become overnight thousandaires or maybe even millionaires. So they're getting in here for the gains. But if you're like a long time holder, you're a hodler, then you'll hold on for dear life because you believe it's the future. I do believe that cryptocurrency is still in its infancy stage. If you try to compare it to like, the US dollar or any other kind of fiat currency, those have been around for hundreds of years, right? Cryptocurrency has only been around for, I think, a little over a decade. So it's still a baby. It's still little. And with the Federal Reserve creating their own digital currency, we can definitely kind of see that this is the direction that we are heading in as far as currency goes. Maybe 30 years from now, you'll be telling your grandkids, back in my day, we used to use paper dollars, right? So what do you think about cryptocurrency? If you believe in it, then keep on investing. This is not investment advice, by the way. But let me know what you think in the comments. What do you guys see cryptocurrency as? I want to hear from you. All right, so now I'm going to take you into my computer so we can actually look at a candlestick chart. This candlestick chart, I'm using Bitcoin specifically, but you can use Yahoo Finance and type in whatever cryptocurrency you want to. You can also put in whatever stock you want to, gold, silver. I mean, all asset classes. You can definitely use Yahoo Finance to, do what I'm doing right now. So let's go to my computer. Actually, before we get into my computer, I do want to say that, just kind of give you a brief overview of what charts are. A lot of times, people can get overwhelmed because there's a lot of moving parts. There's there's a lot of little colors, a lot of lines in the charts. These charts measure price. That's it. Okay. Well, price and maybe, consumer sentiment, right? Obviously, if you see a sharp decline, people are not feeling too good about it, right? Maybe fear is taking over more than greed is. So it could kind of show you where people are on the fear to greed scale, but it really measures price. And you use these charts to help you kind of gauge where you think is going to go next based on certain patterns. Now, it's really important to mention also that these charts alone are not what you should just use as your Bible. You're using the charts, you're looking at what's happening with the coin, what's happening with regulation. I mean, you have to really combine a lot of different things before you're making decisions, but this is just kind of how you get started. So if you're looking at a chart, you can at least tell, what the hell is going on. All right. Now let's get into it. So as I mentioned, this is Yahoo Finance. There are a few other websites that also have charts, but this one is pretty user-friendly and most people are familiar with Yahoo. So that's why I'm using it. Now up here, you'll have the different charts based on what you want to see, right? So right now I have it to the 1 year. So of course it's showing me the price movement for the year, right? For 1 year. Now, each candle will represent 1 day, and that's because I have it set to 1 day right here. If I want to put to 1 minute, you're going to see it'll look much different, right? A little bit more chaotic. And if I put it to 1 week, they'll get a little bit bigger. 1 month, they'll get a little bit bigger, and it's a little bit easier to read. So we'll just leave it right here, okay? So that basically means every candle that you see represents 1 month, okay? On this 1 year chart. And I've kind of zoomed a little bit, so it's no longer a year, but you can still see it's 2018, 2019, 2020, and then the different months, okay? Down here is also the volume. So if you see there's a lot of volume and a lot of purchasing, that pushes the price up. But let's go into what these individual candles actually mean. All right, and actually to make it a little bit clearer, I'm gonna just stick to these 2 candles right here so we can kind of actually see what's going on, okay? So when you have a green candle, that basically means that the price of the asset closed higher than it started. Conversely, with a red candle, it just means that the price actually dropped down. It closed lower than what it started off as, right? So let's say maybe you have, I don't know what kind of coin, let's say Cardano, right? You have Cardano and it opened up at $1. By the end of the day, it went to $2. So the candle is gonna move up here, and then that's where it closed, okay? Now these sticks, they are referred to as shadows. You might hear the term shadow, you might hear the term tail, the wick. They're all talking about the same thing. It's just the little sticks above the actual bars, okay? And this tells you how high the price went during the day. So you might have a situation where, you have a certain stock or you have a certain cryptocurrency, like Bitcoin, for example, went all the way down to 30,000 at one point, but it didn't close there, right? At the end of the trading day, it did not actually close at 30,000. It might have closed at 38,000 or something like this, right? So that's how you would show that price movement right here. So you might have a situation where it's okay, we started at $1, it went all the way to $2.50, but then it ended up closing at $2, okay? And that's what you'll see there. Conversely, it may have had an opening at $1. It could have dropped down to 50 cents, but then it ended up closing all the way up at $2. So it's just showing you what has happened. It gives you a full picture of what happened in that time frame. Remember I said these candles, it depends on what you set. So in the example that I had previously, I was doing it by the month. So that would mean for the month, we had a low of 50 cents. We had a high of $2.50, and we opened at $1. We closed at $2. So that's the basics of what those candlesticks means. It's so simple. It looks complex because it just looks intimidating. But that's all. It's just price, right? Now that we kind of understand the anatomy of each candlestick, what you'll notice when you actually put that into practice is that sometimes the shadow, the wick, the tail will be super long. Sometimes the body will be super small. Sometimes the sticks are barely visible, like you see right here. Those are called candlestick patterns, okay? And people, investors, whoever, people who understand technical analysis, they will look at these candlestick patterns and that will indicate certain things. So I'll kind of get into what those things mean, okay? So I'm going to zoom in a little bit. So as we discussed, this is the body, right? This is the little green part is the actual body of that month. Did I put them up? Yeah, that month. It opened, and you can see it off to the left-hand side. It opened at about 29 million. The high was 41, the low was 28, and it closed at 33, right? So what happened on this day in particular is that people came in and they were buying, right? When you see a tall wick on the upside, that means that they really pushed that price higher. So basically a lot of buyers came in. They rushed into the market. And then throughout the day, the sellers kind of came in too. At the end of the day, the buyers won that day, right? Because it's green. If it was red, that means more people sold than they bought. But if it's green, that means more people bought than they sold, okay? But you can see there was a lot of downward pressure because that stick is so long. So that's kind of some resistance, basically. What you can see is it got up to 33,000, it got up to 41,000, called it 42,000. But people were like, nah, we're going to go ahead and sell. So that to me is a little bit bearish, right? Because the stick is so long, there was some resistance from going up to that price point, right? But then you'll see the next day, kind of the same thing, right? Although it was much more volatile. Remember, Bitcoin, cryptocurrencies, they are volatile, but you can still see that same kind of indication. They try to push the price up again, but the sellers were not going, and they sold and they kind of closed down again. Still higher, right? It's still an uptrend. And you know when things are in an uptrend because you'll see higher lows and higher highs. So you see the low for here, 17, the low for here, 28, the low here, 33, right? So it's just kind of going up and up. Same thing with the closing. It's closing higher and higher. That's an uptrend. Downtrend will be lower highs and lower lows as well, okay? So it's still an uptrend, but you can still see some resistance. So now the resistance is kind of lessening here. But again, it seems like at this point in time, if you go to the next line, this kind of, it looks like what they call a doji. It's pretty much very little movement versus the open and close, but really long wicks. And that's another type of pattern, okay? That means there's a little bit of confusion, right? They couldn't really justify the price being this low all the way at the end of this tail, and they couldn't justify the price being that high. So it kind of ended up in the middle, pretty much kind of where it started, but the sellers still took that month, okay? So there was a little bit of confusion here, but as you can see, in the next month, they definitely made up their mind, and it was a selling spree, right? That's kind of where we're at right now with Bitcoin, okay? But like I said, it's volatile. I definitely expect this to go back up. Nothing goes up or down in a straight line. You have to kind of use these different, charts and kind of see what people are talking about to kind of better form your opinion. There are also different indicators that people would use to kind of help them see on average what's going on. And I think one that you may have heard of pretty often is the moving average. So to get to that moving average, you just go to indicators up here. They show you the most commonly used, so you can go ahead and use the moving average. The periods, it varies. I've seen 20, I've seen 50, 200 people typically tend to use as well. That's like a different video for another day. I mean, we can get into a whole rabbit hole about these charts and technical analysis, but I don't want to overwhelm anybody. So basically the moving average will tell you on average what was going on for whatever period you set. So I put 200, that's a 200-day moving average, okay? So the way you would use this is, okay, if the candles are above the moving day average, then that may or may not indicate a buy, right? This is not financial advice. These things don't always work 100% of the time. These patterns don't necessarily always work 100% of the time because people change, right? Their minds change, their moods change. This is just price indication, but it's price based off of individuals, and sentiment can change overnight, okay? So it might not always work, but this is a typical kind of like just the basic guidance, okay? If it's above this line, it might be a go, right? It might say, okay, listen, this is the average. So if you're above the average, you could probably continue to invest and see some gains. As you can see, we're moving up, moving up, moving up. But then as of late, you can see we actually crossed that moving average. So now we are kind of in the territory where it's like, I would not buy right now, right? Once we get back to that moving average, that's pretty much the sweet spot. You can make an investment if you're going long, right? Right now, there's potential for it to still continue to drop, all right? Again, I am not an expert. If you think that Bitcoin's going to go up tomorrow, then that is fantastic. I love that for you. This is just what technical analysis says, okay? So don't get mad at me. Now, within Yahoo Finance, you can also just use a regular line chart, and the line chart will be exactly the same. It doesn't provide as much information. This only pinpoints actual closing prices, okay? So the candlestick chart provides a little bit more information. It can kind of tell you the sentiment. This doesn't really tell you that. It just tells you, okay, well, we closed at, for example, 58,000 this day, and we closed down here at 34,000, right? But you don't really see what was happening in between that period. The candles let you tell you, okay, listen, there was a lot of downward pressure right here. Look, it was met with some resistance. The price got as low as $30,681 this day, right? By this little wick you can see here. But there was some buyers who came in and pushed it back up. You don't have that kind of visibility when you're looking at just a line chart. So the candlestick charts are a little bit more helpful because you can see what people are actually thinking. You can see the thought process. So two popular terms you might have heard is support and resistance lines, right? So a lot of times when you're also thinking about, okay, I don't know what's happening with Bitcoin or other cryptocurrencies. I want to invest, but I don't really know what is going to go on with the price, okay? So then you can go back into the chart and you can look for resistance and support. So if we're looking at this chart here and we're trying to see, is there any resistance? Where is the next support line? You can see that there's some resistance around 60,000, right? And what I mean by resistance is that we kind of bounce off that, and we've done it a couple of times. When you're looking at these lines, you're not always going to be perfect. So obviously I would consider this a support line or a resistance line, but it's obviously not exact. Like they don't necessarily bounce off this line exactly, but you can see we got pretty close a couple of times, right? So we can say there is definitely some resistance around the $60,000 mark, because as we keep on bumping up to that price, it keeps getting pushed down, okay? Conversely, with support, it's the same thing. It's pretty much, sometimes what you'll see is that your resistance ends up turning into your support. So I would not be surprised if in the future, what now is, okay, people are not trying to go above 60. Eventually 60 will be the new support line, right? Because we do have 2 points. So we can safely say, okay, if the price goes down, there is some support at 60,000. People were okay and they were comfortable investing at Bitcoin at 60,000. So maybe we'll see it drop down to that level. So I switched to the days. The same exact chart, I just switched it from 1 week to 1 day because you can kind of see what I'm talking about a little bit better here, okay? So when you're looking for your support line, you're looking for 2 points where it kind of bounced off, right? So what stands out to me is kind of right here. And where is that? That's pretty much a little bit above 30,000. So we're almost there, right? We're almost at that next support line because it bounced off there twice. So that basically tells us, okay, people weren't okay with it being that low. At that low, it was looking like a deal, right? So people started buying and it bounced off that line. So there's some support there. So we know at one point people thought that at 30 or at 29, call it 30,000, that was a good deal and you're going to kind of rush into the market. So if we're looking at this chart and we're trying to be all technical, we would say something like, okay, once this gets down to 30,000, then I may consider getting back into Bitcoin or whatever cryptocurrency or whatever stock, and I will make a purchase because there's a lot of support here. So the chance of the price going below this is slim, okay? Again, not financial advice. These things do not always work, but this is the thought process. If people thought it was a deal at $30,000, once it gets down to 30,000, we could probably expect more people to enter the market and push the price back up. So if I'm trying to call a bottom, which is never really advised, that might be the bottom of this current crash. Now, depending on what kind of investor you are will determine how you set the parameters of the chart. If you're a hodler, which means you hold on for dear life, then you have a more long-term view. So in that case, you could look at the 5-year chart for your trend. The trends are going to look different depending on what time frame you have, obviously, because things could be maybe more or less volatile over the long run versus when you're looking at only little snippets. So if you're a trader or something, maybe the one day would be more of interest to you, and then you would have to change this parameter to whatever you want, maybe on the hour. People can get super technical on this thing, so it just really depends on what you're doing. If you're more of a day trader, the 1 day, 5 day, those might be your vibe. If you're more looking on the out term look, then you could use the 1 year, 2 year, the max. You know, you can get a better idea of what's going on that way. So yeah, I think I'm going to stop it here because it is getting kind of long and I don't want it to be too confusing. But please, if you have any questions on cryptocurrency, I am going to be doing a mini series on it. I already have some things in my pipeline that I will be discussing. So definitely, again, if you're not subscribed, please subscribe. It's going to be super helpful for your financial future. And if you have any questions, again, throw it in the comments because I will be creating a lot of crypto content. Even if you don't have things that are crypto related, just drop it in the comments because I do want to hear from you. But that will do it. If you like this video, then please be sure to like this video and share it with your friends. And if you have anything else going on, you know what to do. Go ahead and binge watch me. And until next time, keep your money up.